Welcome back. If you're just joining in, the GIFT Nifty is suggesting a start deep in the red, down almost about 100 odd points, in fact more than that. But let's see, this market has been very range-bound. Plenty of individual stocks in focus. So time now for our first corporate interaction. Max Financial is on our radar. Prashant Tripathy, the MD and CEO of the company, joins us to discuss their business momentum and what the growth is looking like. Mr. Tripathi, good morning and thanks for joining in. First I just want to start by asking you about how the quarter that we are in, how is it shaping up? Do you expect Q2 to be better than Q1? And, what is the expectation in terms of business momentum? What is the kind of APE growth that you're expecting now?
So I anticipate Q2 to be definitely better than Q1. For the month of July, which are published numbers, we were 19%. I'm hoping that August, which is going to just get over, as well as September, will be significantly more stronger. So as a result, I think we'll finish Q2 very strong. H2 definitely should be better than H1, with an exception to March, because that we are dealing with large base effect. But one is expecting to end the year, March included, with a double-digit kind of growth number. That's our plan for this year. And we will work towards, with an exception to March as a month, we'll work towards a 20% kind of growth number for the rest of the months.
All right, sir. But if you could tell us, what's the outlook on VNB growth and margin for the current fiscal, that's FY24?
I think it's a bit of, futuristic thing, but do anticipate better than, where we are in Q1. We finished last year, our VNB margin was right about 31%. And the guidance that we've given to the investors is that we would like to be between 27 to 28, because we're making huge investments in growth. As we speak, we are opening 100 new agency offices. We are expanding. We have recruited a lot of people. We are hiring agents. There's a lot of investment that we're making. And when you make fixed cost investment, it eats into margin a little bit. So, for the coming 2 to 3 years, I think we will prioritize growth over margin, not to say that margin is going to suffer drastically, but we are in good space already. So this year, we intend to finish margin in the range of 27, 28, but over the next 2 years, come back to close to 30%.
Right. Mr. Tripathi, there were certain block deals in Max Financial yesterday. Promoters have been selling stake. Do you see more selling from promoters here? Or you think what we've seen is the end of it?
So, of course, as you know, the objective is to deleverage. And, the deal or this particular deal is in that direction, to deleverage and reduce the level of pledge in the company, which is definitely positive. I think as a result of this, the promoter holding will come down. But I think my sense is that's about it. So, with whatever share that got transacted, the balance, the promoter will continue to hold. Again, I'm not very close to this deal. This is really in the realm of investment from the promoter, and, they'll be best placed to answer. But I think all good for Max Life Insurance. I think there was an overhang of pledge levels, etc., and our promoters have very meticulously worked towards enabling the business. So you see the two events which were always a question mark. For example, the Axis transaction, which is coming to a closure, and the leverage situation, and our promoters have worked in resolving both of them.
Got that. That's good to hear. Mr. Tripathi, just to come to that Axis Max Life transaction, you've announced Axis Bank Max Life deal at 113 rupees per share, when the listed parent and practically all businesses in life insurance trading at about 850 rupees per share. So there's a vast difference. And some are talking about this. How do you justify this deep valuation discount, between 113 rupees per share and 850?
Yeah, I mean, the valuation that you see in share price is definitely a parameter which continues to go up or down. Maybe a couple of months ago or 3 months ago, that number was 600. So, that keeps changing. The way valuation is done is done through the cash flow analysis and with assumption on discount rates, etc., and not done by professional valuers, category 1 merchant bankers. So we actually gave our cash flow analysis and they came up with this valuation. So really, it's not the valuation that we determine. It's an externally valued number that we have to go with.
Okay. Are you confident that the IRDAI will approve this valuation and the transaction this time around?
I'm very optimistic and positive because we are just adhering to the recommendation or guidelines which was given, which was to do the DCF-based valuation methodology. This is what we have pursued through category 1 merchant bankers. We have done that. And honestly, this valuation is significantly higher, from the tax book value, that approach that we had used last night.
All right, so what's the timeline for this Axis Bank Max Life transaction?
So it will be a parallel effort that will begin. There is a shareholder approval that we will procure, after which I'm hoping that in a few weeks' time we'll be applying to all the regulators. And it is anticipated that by the year end, which is December, before December end, we'll be able to consume it.
Well, Axis Bank also intends to buy 0.98% stake in Max Life at a later stage. Why not acquire it now? And why acquire it from Max Financial and not through a fresh issue in Max Life?
Basically, Axis Bank is supposed to go up to 20%, right? They have approval from RBI to do the 1,612 crores. So when we did the math of valuation and working backwards, it turned out to be about 6%. They can go up to about 19% through this transaction. The balance 1%, as and when they have capital available, we've said it will be done with Max Financial Services, not with the promoter, Max Financial Services, like the 13% happened. Why not to our company? Because, they don't have the capital right now or the approvals from RBI to do that. Maybe, it could be sought later. And number two is, this capital will be good enough for Max Life Insurance to serve its needs for capital for next 2 years. We actually don't require that capital. So, putting additional capital, it doesn't help the company. Actually, it is sitting idle.
Okay, Axis Bank will be infusing upwards of 1,600 crores in Max Life. Where does that take your solvency, and where do you plan to use these funds?
Yes. So basically, this capital will take our solvency at the end of Q1, which was 188%, to about 226, 227. It's an absolute 39% increase. Max Life Insurance is a growing company, and we have special bets in specific areas like protection, I mentioned to you, like annuities. As you know, they consume more capital by the very nature. We are opening new offices, I mentioned to you. We have huge plans to expand our proprietary channels, which are generally fixed cost-oriented kind of models. So we have acquired many new relationships of late, and we are working with them. So the objective is growth, and when you grow in life insurance industry, you require capital. So that's where the capital is going to grow. To give you a short answer, it is all going to go towards growth, and driving product mix, which is higher profitability.
Mr. Tripathi, Axis Bank's fund infusion could support growth for about 2 to 3 years. What kind of fundraising would you require post that? And would it at that point be done through debt or equity?
So basically, if you look at our structure today, we have about 2,000 crore of equity, and we've raised 500 crores of debt. By design, we could go up to 1,000 crore of debt. As you know, now regulator allows going up to 50%. So we have 500 crore of headroom from the current equity. This 1,600 crore will give us 800 crore more of raising debt possibility. So in a way, we have 1,300 more crore of debt possibility. So with these two put together, I think, we will have enough capital for next 3-4 years. I think for next 5 years, sitting today, maybe we'll require 4,000 crores. So if there is any deficit, we'll just wait out to see what is the impact of, for example, risk-based solvency, etc., whether we release more capital gets released or not. So the objective was to have enough fuel for next couple of years and then go along and look at the capital needs. But subordinated debt will be the next option.
Is there a plan to merge Max Life with Max Financial and get that life insurance business listed?
So basically, we will have to wait for a few quarters for this 20% to happen. Before that, we are not going to start. Any attempt to look at these possibilities is a few quarters away. It will be our desire actually to create a structure which is a listed structure and one combined structure. We are aware that there may be different form of structuring options that may be required, merger, demerger, etc. So we'll start to review that once this 20% happens.
All right, Mr. Tripathy, final couple of questions before we let you go. Does Max Life also get to tap into Citibank's distribution?
For last couple of months, we started to work on that counter. Only last couple of months.
Could you quantify any kind of synergies?
It is just going to mature, so it will be very premature for me to state. We started the insurance sales on that counter.
Okay, all right, Mr. Tripathy, thanks so much for stopping by and filling us in with all of those details. Look forward to having a chat with you in the coming months as well.